All right, welcome everyone to the 5ers Live Trading Room. Again, this is Tuesday. It's the 30th of July, and today we have a very exciting episode for you guys. I'm the host, Jonathan, and my co-host, Victor, is here with me. What's up, Victor? How's it going? How's your trading been today? I feel like one of those spammy bots messaging you on Telegram, like, "Hello, how's your trading been?"
Hi everyone. Yes, you're looking good, Jonathan. I like
Thank
the
you.
Thank
Thank you.
Yeah.
Yeah, as you can see, guys, I got a new setup here. Really nice. Got a new setup in the office here, and yeah, very nice. I'm gonna get a new camera coming as well. So I got some new angles for you. I'm gonna show you my whole setup here with all the screens and everything. It's gonna be pretty cool. Right. So today, Victor, we got someone in the background here. We got the one and only, the market veteran. Been trading for, I believe, over 25 years. Been trading crypto, Forex, options. This guy traded when he started trading when I was a kid. That's insane. All right, let's bring him on. We're going to talk about crypto. How's it going, Dirk? Welcome.
Oh, good. Every time I hear something like this, I feel like I should get my cane out of a cupboard, and make sure that I don't fall when I walk. Makes me feel so old. But nonetheless,
with age, you become, we all become wiser with age, right? It's
tell that to my wife. I don't think that's what she says about me.
That's what I tell her. She's like, "Oh, I feel old," but well, yeah, you are, but you're wiser. Maybe I don't recommend doing that, though. I do not recommend doing that. If you do have a wife or girlfriend, just don't talk about age. But you probably already know all about that. Today we're going to be talking about Bitcoin in the first half of the live stream, and then we're going to be going into live trading. So Dirk, you are free to stay for the first hour, and then also trade live with us if you want as well. But what I really want to hear from you is, your views on Bitcoin long term, because you can trade Bitcoin with the 5ers. Now, I don't recommend trading Bitcoin with the 5ers on the lower time frames. You should probably not be doing, scalping or intraday trading with Bitcoin, because the trading conditions are not the same for Forex, but they're very good for swing trading. So I've been taking a couple of trades on Bitcoin on my 5ers account, and with using my 4-hour system with that wide stop loss, there's no problems at all. So it's really cool that we're able to trade Bitcoin and Ethereum with the 5ers, as well as not only Forex. So this this live stream here today is going to be about not only trading Bitcoin, but also talk about Bitcoin as an investment, because I've got into trading by first buying Bitcoin. That was my first ever trade was buying Bitcoin, right? And I know Dirk is very interested in crypto as well, and I feel like Victor is starting to come over to the dark side as well. And I know Alex is already there, so it's gonna be interesting. And now we're gonna bring you all into this crazy world of high leverage liquidations. No, I'm kidding. But crypto is dangerous, though. Crypto is quite dangerous if you don't know how to trade it. So, Dirk, what are we looking at in terms of the long-term views on Bitcoin? Do we think it's going to go up, down, sideways? Does it have a future at all?
Well, of course, it's going to zero, like it does every 4 years, and then it goes into the opposite direction. Right. Well, I mean, you guys know me. I've talked a lot and in depth about Bitcoin here on your beautiful live streams, of course, also on my channel. On the Trade Delicious channel now as well. And I'm probably what you would call a Bitcoin maxi, at least when it comes to investing in cryptocurrency. So for me, long term, there is no second after Bitcoin. Why is that? Not only because it was the first cryptocurrency, but it's the fairest cryptocurrency still, because there is nobody that owns the largest part of it. There's nobody that owns like 51% of mining capacity, which you would need to do an attack on the network. The network is so big as it is at the moment, has grown so tremendously. It's the biggest by far decentralized network in the world. And we've passed a threshold where it's nearly impossible now, even if we would have somebody like the United States making a joint effort saying, we want to destroy that network now, we want to do a 51% attack. They would have to, by now, have to spend really trillions every month to do so. So that's virtually impossible. And this is something you do not have with other cryptocurrencies out there. This is something you also don't have with Ethereum, in my opinion, which by many, including myself, is of course also considered something like Bitcoin. But with Ethereum, you have a problem. You don't have this proof of work algorithm anymore. You have proof of stake now, which is a little bit to me like Fiat 2.0, because the one staking the most coins has the highest chance of getting the staking or getting the mining reward in this case. So this is like the ones owning a lot of Ethereum are going to get richer, while if you don't own a lot of Ethereum, you only have a slim chance of being successful when mining Ethereum. But that's just for the side. We can later, by the way, also do some live trading for sure. If I get some trading signals in here, I'm right now, actually, I just went out of a trade. Can you maybe share my screen?
Yep, I'll be adding it right away.
Good, thank you. So I just exited this trade actually here, long trade in PopCat US dollar, not because I like meme coins so much, but this is a very liquid one, and I frequently get a lot of nice signals here. So that was the last one here in PopCat, nice buy signal from my new system that I've been working for over a year now, that is specifically tailored to the lower time frames. And we had a beautiful long signal here in a zone of support, which I closed up here at 76 then, or slightly below 76. But just maybe if we get like maybe on Bitcoin also signal from that system later, I'm more than happy, of course, to trade this as well. So I believe I've shown this chart here when it comes to Bitcoin many times on the live stream as well. And Jonathan probably is sick of me talking about it, because this is what I talk about.
Not at all, man.
Friday.
Like that's the exact same chart I have on.
Yeah,
we're basically looking at the exact same thing, same indicator and everything.
Same indicator. So what you see here is the so-called the red channel, the green channel is so-called logarithmic regression, which is a mathematical algorithm to describe systems that are growing very fast in the beginning and then kind of slow down growing so much later in the future. So you get like a curve like you see here that is slightly bent, and the green channel and the red channel coming closer together. This is, however, not because, like Bitcoin is stopping to grow. This is simply due to the fact that the Bitcoin price growing from, for example, back in 2016 here from $500 to $10,000 or $100 to $1,000 US, which is a factor of 10, is of course easier in terms of market cap than now growing from, let's say, $100,000 to $1 million in the future. If we get to those markets, I think one of you is typing a little bit. Can that be?
Yeah, that's me.
Oh, sorry. So this makes it, of course, much difficult, because then we are catching up in terms of market cap to the likes of silver, to the likes of gold, especially, which is right now at about, I believe, 10 trillion US dollars in market cap. We are currently here for Bitcoin at a market cap of 1.3 trillion US dollars, which already is a lot, because if we go back by just 4 years, we saw beginning of August 2020, we were only at 200 million US dollars in market cap. And back then, by the way, we had the same discussions that we have now. People saying, wow, it's at 11,000 US dollars now. I cannot imagine it going much higher. I cannot imagine it sitting at 30,000. Even to go past the back then all-time high of 20,000. I cannot imagine going to 50,000 to 70,000 or maybe even 100,000. That's exactly the same discussion we have right now. It's hard for an asset to imagine that is sitting right now at 66,500 US dollars, that was trading at 73,000 US dollars, that potentially it can go to 150, 200,000, or even $1 million US dollars. And because that is so hard to imagine, it's always a good, way to look at data in a more structural, maybe even scientific way. And this is what you can do with this logarithmic regression, because it shows you that Bitcoin actually, after the halving, always goes in kind of a sideways period. So the sideways period, for example, after 2016 was that where it kind of trades around this middle green line. The middle green line is, when we talk about mathematics, the so-called fair price of Bitcoin, according to this algorithm or to this equation at least. We had the same here after 2020. At the halving, we were trading around the middle green line. After the halving, it took us a while, in this case, about 180 days because before we really entered this bull market frenzy. This bull market frenzy here is defined by the things that happen between the green channel and the red channel. So this one here, to an extent, this one, of course, this one especially here, and hopefully in the future, we'll see that again here. Now, two interesting things here. I said earlier, when we have a look here, how long does it Bitcoin usually take after halving to go into this frenzy mode? Well, in the case after 2016, it took about 300 days. In the case after 2020, sorry, that's of course the wrong one. I meant after 2020, it took about 180 days. So if we we traders, we investors, we're of course always looking at pattern. And we see here a pattern that has worked so far 3 times, by the way. I'm just not showing the 2012 data here because price finding on exchanges was still a little bit choppy then, in my opinion, not really realistic. So in this case, we saw this work 2 times. It's probably going to work a 3rd time, 180 days into the future from the date of a halving 2024, which was, I believe, on the 19th of April. Then we are end of October, beginning of November 2024. If it takes us 300 days, that would put us to mid-February of 2025. So this is when we actually can expect Bitcoin to break out of its green channel. But that doesn't mean that, we have to wait to build up a Bitcoin position until then, because breaking out of this green channel, let me zoom in here a little bit, means if we were to do that right now, the price already would need to go up to around about 93,000 US dollars. So just up to there in order to enter the bull market frenzy. If we forward us a little bit to, let's say, beginning of November of 2024, we would need to see prices over 100,000 just for the bull, or the part of a bull market where really things go crazy, where you see those days with 10%, 20% up, where your uncle, your grandma, your papa, your mama suddenly call you and ask you about, well, hey, I've heard here about something called Bitcoin. Should I buy that now? When normally the alarm clocks start ringing already in your ears. So this is with prices above 100,000 US dollars. And if we then forward from where we are right now, from the halving, actually 1 year to 1.5 years into the future, so between late April 2025 to probably November of 2025, December 2025, this is where we probably are going to see then again Bitcoin hitting its new all-time high for this bull market cycle. So this is when Bitcoin starts hitting here this red channel. It can go through the red channel as well. Like we saw that here in 2016, we went all the way up to the top of a channel. Last time we didn't do that. I don't think we're going to do that as well this time, because it's a maturing asset. It's difficult it's more difficult to go from 66 to 300,000 than it was from 100 to 1,000 US dollars. But nonetheless, even if we just hit maybe here in September next year this lower band of a red channel, we're talking about prices over 200,000 US dollars, maybe even something like 250 or 300,000 US dollars. So this is the upside, in my opinion, at least, that we have currently from where we are trading. So if you hear somebody asking or telling you something like, wow, Bitcoin, 3 times we tried already to break out here to the north. We have failed so far. Like this seems to be a solid barrier. It's like what, 1, 2, 3, 4, 5, 6, 7, 8 times we've tried to break over this. We're not going to do that. We probably are. And I'm not even want to talk about institutional adoption here. I'm not going to talk about, about a politician from a first world country for the first time taking things into his mouth, like we want to put Bitcoin on our balance sheet as our Federal Reserve. So this is what Donald Trump said. now we don't need to discuss, obviously, about Donald Trump because he has a tendency to promise things that will help him to get elected, of course, like any good politician out there. But the fact alone that Bitcoin has already this kind of mainstream attention, that's something that is used to gain votes, actually, because we're like 15 million people in the USA, or 50 million, I believe it is, that hold cryptocurrency. So this is a massive crowd. This is potentially a lot of votes as a politician that you can collect. This is something good. This is a network effect. This is how people who normally never would have heard about cryptocurrencies are hearing about cryptocurrencies as well, because they see it every evening on the news, on ABC, on Fox, wherever, and in other countries as well. This, I think, is a tremendously good thing. Another indicator, and I know Jonathan loves this one very, very much, that you can use to kind of spot these tops also, is this so-called MVRV Z score, which is also available on TradingView now, which makes me very happy because you don't need to visit like all those different websites to get that information. By the way, this indicator here, Bitcoin logarithmic regression, you can also find on TradingView. I coded this one open source. So if you go up here to indicators, look for Bitcoin logarithmic regression by the good, the bad, and the Bitcoin. You can use that for free. The source code even there is shared, because I think everybody should have that. Everybody who's interested, at least long-term, into crypto should have that that logarithmic regression to put it onto the Bitcoin chart. So yeah, this is like very long-term, of course. And I liked, another thing why I like to show this chart so much is, especially if you trade something like this, like on the very low time frames, like I showed you here, like this is a 2-minute chart for Popcat, and I'm doing the same at the moment for Bitcoin. You kind of have a tendency, or at least I have a tendency sometimes, you know, to get a little bit lost. You see like a big candle up, I don't know, like for example tomorrow night after the Fed interest rate decision, and then you know, it makes you a little bit crazy in your head. So I always say, when in doubt, zoom out. You know, by zooming out and looking at a chart like this, you can even put this to a weekly or monthly chart if you wish to. It kind of puts the ups and downs we see at a daily level a little bit into perspective, in my opinion, because you see, well, the slump we saw down is actually just a minor correction in the grand scheme of things. So another thing I would like to look at today is what we see recently and what tools you can also use, you know, to kind of spot when in a bull market like we are in at the moment already is actually a good time to buy, and when should I kind of expect a correction to the downside. This is also a chart I've been updating again and again and again for the past, almost 12 months now. And these are the so-called bull market support bands. So the yellow and the red line here, which is simply a 20-week simple moving average and a 21 weeks exponential moving average. And above that, you have a 8-week simple moving average. So it's a daily chart, but weekly moving averages in this case. And one thing that's really happening in every bull market, but later on also in a bear market, by the way, but where things are reversed, of course, is that whenever we see Bitcoin falling below this 8 weeks moving average, it has the tendency to test the so-called bull market support bands. And this test of the bull market support bands is then always, this has so far a 100% hit rate over the years, always a good area to buy again, to DCA a little bit more into Bitcoin. That was true back then here in March of 2023. It was a little bit difficult still to see there, of course, because we were not sure yet, are we already in the bull market? Was true here in May to June. It was true when we had this extended trading range. I remember that one very well. We all felt very bought by the market from August to October 2023. This was true just in the beginning of the year. We didn't even go down all the way to the bull market support bands. This was true here in the beginning of May when we had this large dip down. And this seems to be also true here recently when we had the slump down. Yeah, it went a little bit further to the downside because sometimes you have news that, of course, can influence these prices more to the upside or downside. In this case, it was my dear German government selling. Sorry, it's like super loud on my ears, the typing.
Really?
Yeah, super loud. I don't know if it's
I
my
thought I
headphones,
fixed
maybe.
that. Sorry about that. I gotta.
No
I'll fix
worries.
that.
So it was the German government selling here Bitcoins, when the Mt. Gox Bitcoins coming onto the market. So the fear of the market being flooded by potentially 200,000 Bitcoins, which, by the way, is not a super much volume if we look at the grand scheme of things. But seems like this has been deflected. And watch this also, what we saw recently. We saw Bitcoin recapturing the 8 weeks moving average. And whenever this happened in the bull market here, and here, that was the so to say the initial reaction then to go to the next level. And the next level here would really be a breakout. And I can guarantee if we see that breakout, and no, it doesn't need to happen like this week or next week, could very well be that we need to be patient still, at least until mid-end October, beginning of November. But once we see that breakout, then to the upside, things are going to heat up very, very fast. Once we see prices trading at 74 or 75,000, I wouldn't be surprised to really see prices very fast move to mid-80s or even maybe to 90,000 US dollar until we then see a correction, a bull market correction again, which also is not going to be the end. It's not going to be the all-time top. As I said earlier, things are going to get really heated up once we see prices breaking over 100,000 US dollars. Then we are very fast going to be at 150, 180, potentially 200,000 US dollars. Yeah, so you see, extremely bullish, my outlook here, my personal opinion about Bitcoin. And this is now really at the moment of this year, it's playing out what you and I, Jonathan, have been talking about for the past 2 years. I remember so well when FTX back then collapsed on a different channel. Back then, we were trading at 16,500 US dollars. And back then we said, this is the area now to buy. And of course, it's always easy to say that in hindsight, but it's coming true. And so far, it's playing out beautifully. We have the elections in the USA mid-November, and usually also, I think I talked about this presidential election pattern on the stock market before here as well. After an election, we see normally for 1 year also extremely bullish stock markets. So my go-to strategy is whenever I can, whenever I see a slump down here, patterns like this where we test the bull market support bands again, I like to add to my position. Yeah, that means, of course, sometimes like the last time I bought at 62.5 and 60,000 US dollars. No, I didn't get prices at 54,000 US dollars because my orders were executed before that. I didn't expect such a severe slump down, although the severe slump down here only was 25%, which also is completely normal in the bull markets. It's also completely normal in the Bitcoin bear market to suddenly go up by 25%. This is why I mean, like, use a long-term chart like this to put pullbacks like this really into perspective. Like, hey, has that happened before? What happened after this happened before? Well, actually, in the grand scheme of things, this is not something very bad. And then use that to buy. And of course, I could be totally wrong. That's always the option. Yeah, but I don't see why that should happen. I mean, in order to be wrong here, I think we need to see something kind of a super black swan event out there. I don't know what that could be. I mean, we have seen everything. We've seen exploding nuclear power plants due to tsunamis in Japan. I think that was 2012, no, or 2013. We've seen a pandemic hitting the world. What else is there going to come? I don't know, Yellowstone exploding, aliens landing and stealing all of our Bitcoin. I don't know. Yeah. But, as a trader, you cannot bet on black swan events. So that's not a good strategy.
That's definitely waiting for the aliens. If they come here, I'm at least I got Bitcoin, and
that would be thing.
Yeah, probably
we are going to see the aliens are going to sell us goods and knowledge, but they only accept Bitcoin as payments.
Exactly. I mean, that's going to be the next big. All they're waiting for is basically Bitcoin, adoption, worldwide reserve currency adoption, and they're like, okay, they're ready. ready for our visit. I'm pretty sure that's all they want. I'm gonna bring up my screen here because it's very interesting that we have basically the same chart on here. And I remember when like Dirk said, we were trading. Yeah, I can't believe, was it? Yeah, man, it was. That was in. What's that in 2020 during the pandemic?
No, 2020, not yet. I wasn't streaming back. That was FTX. That was 2020.
Right, I was saying when we're trading down below 20. That's right.
Yeah.
Because I remember, when, because what happened, this is very interesting, guys. So what I believe, and we get a question here saying, what are those green and red arcs? That's the, this is actually an indicator available in TradingView that it's here thanks to Dirk. He has copied the, there was an original indicator back a while ago, but the original author removed that from TradingView, but Dirk has copied that one and created one of his own. So it's now, I believe, is it freely available?
It is totally freely available. You just
all you have to do is just go into indicators here and search for Bitcoin log, and then you're gonna get it up. Bitcoin logarithmic regression here by Crypto for Money, which is Dirk on TradingView. Add this one, and then you're gonna get these red and green lines right here, and it works on the log. So you're gonna use it on the log chart.
That's important, exactly. Yeah, there's a question here. What are those green and red arcs? Yeah, I didn't mention that. So basically, the green arc symbolizes kind of the normal range Bitcoin is usually trading in. Sorry, I need to off my mobile here. So the normal range Bitcoin is trading in, the so-called fair range, with the middle green line being the mathematically according to the regression fair price. And what you can do is basically say like, oh, okay, every time we hit the lower green channel, the lower part of the green channel, it's a good time to buy. Every time we hit the upper red channel, which are the price extremes, it's a good time to sell. It's really simple like this. Good trading.
We also have an interesting,
very well.
Also have a very interesting question here from Andreas saying, has anyone ever actually used Bitcoin? So I use Bitcoin quite a lot. I've bought a lot of stuff I own around this office, for example, has been bought by Bitcoin during, I believe, 2019 to 2020 or even 21. Most of my salary was paid in Bitcoin, and I paid most of my made a living basically on Bitcoin, paying my bills and everything with Bitcoin. So it's very, very possible to buy pretty much everything you need and pay your bills and everything with Bitcoin. And a lot of people actually do that. So Bitcoin is I remember in 2017, we had the same discussion. It was not as easy to use Bitcoin in everyday life, but now it's very simple. Most stores accept Bitcoin, at least the online ones. And there's always going to be stores where you can buy goods using Bitcoin without any problems at all. So very, very usable. And it's also cool because long term, it just increases in value. So like you hold Bitcoin, and I remember when most of my salary, like in 2019, was paid in Bitcoin. When it started running, that I made some good money doing that. Just holding it instead of exchanging it directly to USD. Anyway, looking at this chart right here, I think what you want to do is if you want a very simple idea of how to look at Bitcoin long term, you want to add this logarithmic regression indicator on your chart. Look at the weekly or the daily. I think Bitcoin is best analyzed on the weekly or the daily, and with that long-term focus in mind. Now, again, we're not talking about specifically about trading. And then there's another indicator that you have, like the one that Dirk talked about, the MVRVC score. Now, I've talked a lot about the MVRVC score as well, because I've done several webinars just to focus on the MVRVC score and how good it is when buying Bitcoin. And I remember when we actually dipped below 20K was right here when Bitcoin entered the MVRVC score. And I remember that we were streaming at that time, and I said even after the crash of Luna, even after the crash of FTX, I said like, well, this is where we want to be buying Bitcoin. I remember like we were hitting this, getting close to this support right here, and we were testing the 2017 all-time highs right here, and we were entering inside the MBRBC score, and we are lower, below the green channel, which is almost like buying at a massive discount. And I think these are the areas that you want to look at when accumulating Bitcoin. Now, of course, we're not in that area anymore. We're halfway between the buy zone and the sell zone. And as you can see here on the MBRBC score, you have the area down here, which is, I believe it's below. Is it? I believe it's 0. So I believe it's 0 is when you enter the buy zone, and then is it perhaps, I think on this one it's 7. So when you get into the area above 7, you enter the sell zone. But by looking at the MBRC score and then also thinking about the idea of alpha decay, I've decided that my sell zone and my take profit target for Bitcoin will be when the MBRC score enters the above 5 on the MBRBC score. And I think if you look at the move from the buy zone, we're now halfway between the buy zone and sell zone, little bit below halfway, but we're still inside the green channel here if you look at the regression chart. But I do think that once Bitcoin starts running, once Bitcoin breaks above these highs and starts running, it's not going to take too long, in my opinion, for it to reach the red zone, because you see that those moves are quite explosive moves. So I do suspect that at the MVRBC score will enter my sell zone before it hits the red line or the red arc, basically. And I'm probably going to be selling at that point anyway, because this has been my plan for Bitcoin ever since I started trading and ever since I started, understanding the MBRBC score, which I believe was in around 2018 or something like that, and it has worked out great. And even I do suspect that price will start to reach around the like $160 level, which is above, which is more than 2x current prices. So I think most of my Bitcoin position was bought around this area right here, but I do have more recent entries, like on the most recent dip. I'm pretty sure you guys remember when we were trading Bitcoin here live, and I mentioned how I started buying when you had that dip right here, and my invalidation area for that position is going to be below these lows, and that's going to be my invalidation for this position here as well, which means I'll get out in profit, not big profit, but still in profit. So if you look at that level as your invalidation level, the trade that we potentially can get out of this analysis that we're looking at today in terms of risk to reward is very, very good, considering this is a long-term setup. This is a position trade, right? So up to 160K, which is below the red area, we're talking about above 3R. So not only is Bitcoin going to double in price, you're actually going to triple your risk. The risk, whatever you're risking on the trade. And I think it's important to think in terms of not only, because a lot of people, when they think about Bitcoin and they want to invest in Bitcoin, they think, I'm gonna invest this and then price will double, so that position will double. But you also have to think about where am I going to get out of that trade? Where is the trade invalidated? So just the way you're trading with a stop loss and you're thinking about risk to reward, think about how much are you actually risking on that and how much can you gain based on what you're risking. And in this case, looking at above 3R, when Bitcoin is at $66,000, hovering below all-time high, and we're here talking about a potential 3 times the risk you're investing. That to me is just insane. You don't really tend to look at an asset that is trading like at major resistance at close to all-time highs and talk about those types of risk to avoid. Like you would at least want to see like a break and retest. But the thing is with Bitcoin, if you look at the history of Bitcoin and the way it's moving, this to me is a no-brainer. You look at this pattern right here. This has it has never failed, and I'm going to trade it until it fails. And when it fails, I'm only going to lose the amount that I'm risking. You know, so I think Bitcoin, and also when we talk about trading, you know, if we look at the overall idea that we have here, we're obviously very bullish long term. So if you're going to be trading this, I highly recommend that you're only looking at long. You're only looking to go long. I think that's important.
Yeah, that is like anyway always important for all trending markets. No, like very often the same applies to stocks because stocks also in the long run trend up. So it's very hard to be a contrarian. It's a different thing with Forex, in my opinion, because Forex is more like a sinus wave. You know, it goes up, it goes down, because it's a comparison of two economies by the end of the day. One question I want to answer here, there is one gentleman, one person, M76BB, has been asking a couple of times now. Can you share my chart again, Jonathan? Thank you. How to set up this logarithmic regression. And I think he said, when I put it on there, I get something like this. First of all, you need to have enough data. So when you choose Bitcoin, US dollar, either take this, I always like to use this Bitcoin all-time history index directly by TradingView. I think you, Jonathan, are using Bitstamp data. So make sure there's enough data available. And if you have a curve showing up like this, you haven't put the scale to logarithmic. The scale then is still on regular. You need to put it to logarithmic, and then you will have the same curve as we have here. Very easy. Does that answer your question? I hope so. M76BB.
Yeah, I think that's the usual mistake you do when adding this the first time, and it's. I guess the name of the indicator kind of gives it away as well. This is a logarithmic regression, which means you have to look at it on the log scale. I know also that the user M76BB does have a lot of questions on Bitcoin. So I think now on this live stream, now's the time to actually come forward with all your questions that you want to ask me and Dirk and also Victor when it comes to Bitcoin here. I think you also asked why did Bitcoin dump when Donald Trump had his speech, even though Donald Trump said things that were positive about Bitcoin? I think because most mature people understand that it's politics, and even like nothing is going to be done about that until it's actually done. I mean, he goes to a Bitcoin conference and talks about like, oh, I'm going to make Bitcoin. It doesn't matter if you like Donald Trump or not. I think most of us understand that politics say things to get votes. And then when they actually come into office, there's no legal binding thing that says that they have to deliver on the promises. So I think what the market understands is this is Donald Trump speaking to an audience full of crypto people saying that I'm going to make Bitcoin the reserve currency. It's like they're like, wait a minute, that's a bold statement right there. Yeah, exactly. Make Bitcoin great again. Like it doesn't. Like for me, like I'm definitely. I mean, I'm not American, but if I were, I would probably vote for Donald Trump if you're going to be honest. But the thing is, what he's saying about Bitcoin makes me go like, yeah, this is quite obvious what you're doing right here. I mean, you're trying to get our votes. And I think the market understands that as well.
Yeah, it's always also a bit like, buy the rumor, sell the fact. Kind of the same effect we had at the beginning of the year with the Bitcoin ETFs. Prior to the actual announcement of the spot ETFs, the market was going bonkers. When the approval then came, well, then we entered a mini bear market. At least prices came down again. And from what I heard is that people were disappointed mainly by a couple of things. They were kind of expecting like that Donald Trump is would be announcing their life, that Bitcoin is definitely going, or the USA is going to continue to buy Bitcoin, not continue, is going to buy Bitcoin, but instead he said, well, the 200,000 Bitcoin the USA already has, also confiscated, obviously, from criminal activities. We are not going to sell those. And then the second, that's the difference to actually going forward and buying Bitcoin and putting that into your treasury, obviously. Then the second thing is that he always talked not specifically about Bitcoin, but about crypto in general. And you're at a Bitcoin conference. So you're where every keynote, every workshop, every presentation is about Bitcoin and not crypto. And if you are in that scene and you know how Bitcoin maxis, myself included, tick, they are actually offended when somebody puts Bitcoin in the same drawer as crypto, because crypto doesn't equal Bitcoin. And this is a mistake he made. And by that you can see like that he really hasn't, he didn't dive very deep into this. I think he's still seeing things on a shallow thing. I agree with Jonathan. He probably is only saying that to kind of catch votes, which, you have to understand that this is how politics works. That's probably why I never could be a politician, by the way, as well. So this was the major disappointment. In general, it was viewed as a disappointment, and this is why the market then also went down. Not to mention things like that, there were rumors he's going to bring Elon Musk on stage and stuff like this.
Yeah, and like you go to a Bitcoin conference, like there's a saying in the Bitcoin community, Bitcoin, not crypto. And so there's a huge difference between Bitcoin and crypto. So crypto is everything. That's, I'm not like, there's coins that I even can't say the name of because I'm gonna get banned on this show. Like, it's ridiculous, right? So crypto is just the wild west of finance. That's where all the scams and everything they go to crypto. While Bitcoin is always going to be Bitcoin, nothing more, nothing less. Just the transparent blockchain that it's you have a Bitcoin node at home, which means you almost like you have your own central bank at home, right? It's the Bitcoin has the possibility of really transforming the whole world from a financial point of view, while crypto is just I'd wish that we didn't have the crypto aspect of Bitcoin, because then Bitcoin will probably be much higher in price. It will probably be having much higher adoption, because like when you one big talking point against Bitcoin is that, well, criminals use Bitcoin. No, criminals do not use Bitcoin. They use crypto. Why would they use Bitcoin? It's completely transparent. There's nothing anonymous with Bitcoin, which makes it, not the great tool to use in criminal activities. And then you talk about cash, which is and potentially completely anonymous, right? And so Bitcoin fundamentally the value of Bitcoin is there's tremendous upside, because we've only seen the beginning of nation states starting to adopt Bitcoin, and there's going to be more and more and more. We'll see countries, because they're not going to have a choice. They're not going to have a choice. They have to, or they'll be left behind. You'll see smaller countries, and then you'll see bigger countries, and then all of a sudden America's going to say, we kind of have to. Because the risk is in not owning Bitcoin. When you have people like I can't remember his name, but like one of the biggest investors, he was actually at the Bitcoin conference saying that more than 30% of his net worth is in Bitcoin. Okay,
was that Mark Cuban? Or?
Was that Mark Cuban?
I don't know.
Okay, then I'm completely wrong with being the best investor, but.
No, I don't remember, but I remember there's like one prominent figure who said something like this, yeah. But me and names. Yeah. I'm happy at my age. You're happy if you remember your own name when you wake up in the morning.
Dirk, you're very funny. But I gotta give it to you. You look good, whatever age you have. You don't look at all
Fantastic what cameras can do nowadays. No? But thank you. It's actually my wife told me, like, whenever I see you on the stream, do you put on makeup or something, or do you use a filter? I said, no, by some miracle, somehow I look younger on camera than when you would meet me in person.
By the way, it was not Sailor that said that. Sailor has like probably 110% of his equity in Bitcoin. What I mean is like we talk about people that run hedge funds and big financial institutions like BlackRock. People like that are actually coming out and saying that they have a substantial amount of their private equity in Bitcoin because the potential is just so enormous. And a lot of these people have started talking about the risk is not owning Bitcoin. The risk is not owning Bitcoin and being left behind on that run that most of them think is going to happen. I mean, to me, it's not a question if Bitcoin is going to pump. The question is how far are we going? Are we going to 300,000? Are we going to 1 million? I mean, what I find a bit difficult to grasp though is people talking about like $13 million per Bitcoin. That would take this analysis and just completely throw it out of the window, because what we're looking at now is we're looking at logarithmic regression, which means that the volatility and the trend and the cycles, there's a regression, right? And eventually you come to a maturing asset that is going to be trading more like the Forex market,
Yeah, it's like I think this is a little bit over the edge, but the foundation underneath it is that theory that black hole, that Bitcoin is kind of a black hole of finance, eating up over time the value of all other assets out there, starting with fiat, then swallowing large companies like Apple. When I say swallow, I mean overtake in market cap. Until it's like the predominant asset worldwide, which would then equate to a price per Bitcoin. I've also heard something like 50 million. I think I saw somebody or read something from Fidelity Investments, was that today, talking about potentially $1 billion in 2040. That is crazy, guys. I mean,
But then again,
earlier, don't trade black swan events. Don't try to time black swans. You're not going to be able that. Don't try to time something like this. If you're invested in Bitcoin now and you reach a point maybe in the future where you say, hey, if I take out half of my Bitcoin or 75% of my Bitcoin and cash it out, I'm probably going to have a convenient life from now going forward, or I can pay off a lot of debt, or I can do whatever your wish is, And when I talk about wish, I don't mean I wish to buy a car. That's like the worst investment you can make, buying a new car. But like if you reach a point where you can pay off your mortgage, where you can make sure that if you lose your job, you are not going to become poor for the rest of your life. You are still going to have enough money to survive for the rest of your life. This is awesome. Don't wait for this 1 million per Bitcoin, because I can guarantee you, you're not going to cash out at 1 million or 10 million or 50 million. You're going to cash out far, far earlier than that. When you have like tripled or quadrupled or quintupled your money, you're probably going to cash out, and then you're going to be sad later on about it. But it's okay, we all have goals with that, and when we reach the goals, we need to execute. And this is also where this data helps us. Like Jonathan just earlier said, he's using the MVRV Z score. When it reaches a value, I think you said of 6, this is for him the time to cash out. Totally okay. For me also, by the way, you don't need to wait until the upper channel is touched. I'm going to DCA out of the market because I also don't know where's the high going to be. And it could very well be, that I start cashing out at 150 and my last cash out was at 250,000. And then the price makes like a final spike up to 800,000. Could all be.
Yeah.
But, it's impossible to time the bottom and the top. And if you have a goal that you want your investment to achieve, well, and when that goal is reached, then it's time to cash out. Don't cash everything out. Maybe leave a little bit on the side. Something like, I don't know, 0.1 Bitcoin that you never touch. Something like this, for future generations.
We have Louis saying something interesting here, talking about quantum computing and the safety of Bitcoin. This is something that I've looked into. I haven't done any like thorough research on this, but I do believe that it could potentially pose a massive danger to the future of Bitcoin, because Bitcoin is based on blockchain, and blockchain is based on basically cryptocurrency, right? You have it's the your oh man, I can't find the word.
Encryption.
Encryption, yeah, it's based on encryption. And if so the problem with AI, if we get AI, if we get a super intelligent AI in the next years, the next 10 years or 100, like tens of years or whatever, and we get that, and with quantum computing, then potentially it's able to crack whatever encryption we have currently, and like in a very simple way probably. And I think that is a real danger to Bitcoin and the future of Bitcoin. But I also believe that, like personally, I believe that superintelligence is a threat to not only Bitcoin but basically all of humanity. You know, so if we get there and we get that type of threat, then we might not even need Bitcoin, and you know, so it's pretty much an existential threat, I believe, to all markets, because if we're able to crack encryption as we know it, then all of our security as we know it is just gone, and we're going to have a very difficult time surviving in the digital age. So I think there's I actually think that the chance is not zero for that to happen.
It will happen sooner or later. Absolutely, that is a danger. But, and this is a big but, Bitcoin is the last thing you have to worry about then, because before the like a potential hacker would start hacking the SHA 256 or what is it called, encryption of Bitcoin, what would they do first if they have a tool that can crack any currently used encryption? They would go to hack bank accounts. Much easier. Why hack a blockchain when you can just use it to hack bank accounts and rip the money out of there, or rip banks? So that's a much higher leverage. They wouldn't start with Bitcoin. And if that happens, we have other problems than worrying about the price of Bitcoin. Guys, I have to quickly go 5 minutes away. Very sorry, the mailman is coming. I need to let him.
Well, I was actually thinking that we're taking a 10-minute break. Dirk, if you want to stay on, then absolutely. I think we want to do some live trading.
I'll stay on for a while for sure. Yeah.
All right.
Good. See you in 10.
See you guys in 10 minutes. All right, we are back. Let's get those likes up. Let's hit that like button. We're a bit low on likes today. I know that, honestly, like I know that most of you watching this are not super hardcore Bitcoin fans, but now it's time to trade Forex. So hit that like. Man, it's a bit messy here. I got this setup I have right now. I have the camera like in front of the screen. I got the lights in front of the screen. So I'm kind of like, if I'm gonna look at the chart, I'm gonna trading. I have to kind of look behind the camera. So I get a new camera coming. Hopefully tomorrow. Hopefully I'll have that new camera tomorrow, and then I'm gonna have this camera that you're seeing here. Like to the side of me, it's gonna be pretty cool. It's gonna be a lot of watching me.
It is already looking cool.
It is really. Is that like noise canceling tiles you have like there in the background?
Yeah, it is.
That is. I need something like that too.
Yeah, set them up today. I ordered the 24 more of those. I'm gonna be setting. I got them behind the screens and everything, but yeah, making it. Nice. And sound quality is so much better as well. Yeah, like there's no echo. Like it's really, really great quality on the sound. And look at that. Look at this. Who's that? That's us. So nice. I'm watching myself streaming, and you are watching the stream while watching the stream. It's like stream inception. It is. Amazing.
like
Inception. What are we the charts and start shooting away at our
good idea.
Before we do that, I do have a question that I didn't get to ask while we were talking. Not to say, since I'm not I don't consider myself a crypto expert. So if that's why I kept my contribution to the minimum. But I do have a question to, okay, so both of you are very bullish, right? You make a very compelling argument that, Bitcoin has a bright future and we all should join the bandwagon. Basically, you say if you're not in, join, and if you're in, join more, etc. But what I mean, as a trader, I'm always I'm trying to see where's the risk coming from, right? In a trade, in a position, it doesn't matter if it's a day trade, if it's a scalp, it's my portfolio, my long-term portfolio. I'm always trying to see, okay, is there any risk out there that I'm not accounting for that could, detrimentally affect me? And every asset has that, right? In real world, nothing is perfect. So what are the risks of Bitcoin? Well, as a trader and as an investor.
Well, as I guess as a trader, it's the same risk. It depends. As a trader, I guess it depends on your edge, right? But as an investor, I'm looking at Bitcoin, and looking at the risks of Bitcoin would be something fundamentally flawed with Bitcoin. I mean, if there's a catastrophic bug, it's gonna go to zero. Like if Satoshi is CIA, it's going to go to 0 or 1 million. Like we don't know, but that's a risk, if Satoshi comes out and like, this is it's created by NSA. This is all big joke. That's a risk, something like that. But I think like the most logical risk in Bitcoin fundamentally would be that the code is flawed. It's fundamentally flawed, which I don't believe it is, because it's very simple.
And we would have noticed that in the past 15 years now.
Exactly.
Probably. There was a bug in the very beginning. I think the risk is like with other currencies out there. If you hold actually with any asset out there, it's only valuable if it's perceived by people as valuable. If you have $100,000 on your account and suddenly, for whatever reason, people don't think US dollar is worth anymore, nobody wants to have it anymore, well, then it's going to zero in comparison to other currencies as well. And that's the same risk for Bitcoin. And I mean, this is also the ongoing discussion and the main argument of Bitcoin or non-Bitcoiners, people that don't believe Bitcoin has any value, they say, well, it's not based on anything. It doesn't have any value. But I mean, this is a very philosophical discussion very quickly, because we could assume the same thing for any fiat currency out there, or as somebody says here, for GameStop, for example. It's only valuable when people believe it's valuable. And at one point in history, well, I don't know, shells or wheels or stones were perceived as something that's valuable, that can be paid. And over time that changes. That is the risk you have with it. But over time, this risk has become less likely to really occur. I mean, that was for sure something that you had to expect in 2012, 13, 14, like every day, that it could basically suddenly the sentiment swings around and nobody's interested anymore. Nobody wants to have Bitcoin anymore. But nowadays, I don't think so. That's really that much of a risk anymore.
Yes, I guess it's that leaves. I mean, regulatory pressure, political pressure. That's a real possibility of really pushing price lower as well. I mean, you could have, the U.S. banning Bitcoin. Something like that would be probably short to medium term catastrophic for price. Long term, though, I think it's still going to be the same fundamental asset. But I mean, if there's going to be massive regulatory pressure, that could definitely become a problem, which today it doesn't really look like that's going to be a problem either.
I see. All right. So basically, the risk that you guys can identify don't seem to be really relevant right now. I mean, the fact that the perceived value of Bitcoin or crypto in general, or shall I not do that comparison?
No. It's of course always good to think something like this. For me, and this is why I'm actually so overexposed in Bitcoin too. I never would recommend that to anybody out there building up a portfolio that's where Bitcoin has a large percentage of that portfolio. But for me, it's always like, what is the alternative long term? Do I see an asset that has a better upside potential? Yeah, there for sure could be some assets, maybe some small startup companies I could invest in, but where the risk is also higher. But for a pretty mature asset nowadays, if I compare to, well, shouldn't I buy a stock of a large company, maybe Amazon or Apple or Nvidia or something like this as an alternative? No. Still, I think the risk would be higher to buy that single company. The risk would be higher to buy real estate, for that matter of fact. This is for me, I'm lacking alternatives when it comes to investment. Gold is a very bad investment. Somebody's managing that well. And I really am disgusted by all of those gold bugs out there, because I've been, I have to really point.
Why is that?
Because I've been hearing. No offense to the gold traders out there. We have a lot of gold traders.
No offense to the gold traders, but the thing with gold is always a thing. All those crash profits, like Harry S. Dent, the 95% crash comes now. It's just around the corner. He's been saying this since 2008, and he has always said, you have to invest in bonds. You have to invest in gold. Well, of course, gold right now is performing very well, but for large portions of the last 15 to 20 years, if you would have invested in gold, you would have less money, especially inflation adjusted, than you would have if you just would have, invested into something else. But by the end of the day, of course, I mean, this is a highly philosophical discussion. And by all means, if you guys out there say, like, you know what, Dirk, this is all pretty dumb what you are telling there, I'm not believing that. Good. This is the way you should think. You should make up your own mind. I mean, this is what you guys are teaching here when it comes to trading as well. Do your own due diligence, find your own approach to risk and reward, and follow your own instinct by the end of the day. Don't ever listen.
I think there's value in owning physical gold. There's definitely value in that, but the value that I see in owning gold is It's like for me, Bitcoin is like digital gold. I have Bitcoin because Bitcoin has the potential to be a hedge against the traditional financial system. Just like gold is also sort of like a hedge against CBDC and things like that, right?
Yeah.
If you're gonna have like a very problematic situation, having physical gold is valuable. There's definitely a value in that.
They typically, the gold is seen as a low correlation to the equity market, and in that way it can be or typically viewed as a hedge. But I think what Dirk is meaning, and the hedge value or argument, I think is valid. I do think that, but I think what Dirk is meaning is as a, when you compare that its performance through time, it's underperforming the equities market. And
Yeah.
so if you say, oh, I'm not going to invest in equity, but I'm going to invest in gold, doesn't make sense if you do that like with a big portion of your portfolio, because it's an underperforming asset. And why would you do that, right? If you're talking about hedging, that's something different. You're trying to include different assets that move uncorrelated or less correlated to each other, so that you balance out those drawdowns, and that makes sense. That makes complete sense.
But do you still think? Sorry, do you still think that like gold is kind of the hedge asset? Because the way I see it, like the last years, I have a feeling gold is becoming a risk-on asset as well. Every time we see the dollar becoming weaker, every time we see the stock markets going up, we see the price of gold rising. I mean, to a certain effect, that's because of the XAU US dollar, so it's because of the way it's calculated, the price. But I think somehow this old thing that you should buy gold when the stock markets are crashing kind of is not working really well anymore at the moment.
I agree. I agree. Historically has been having that view or perceived as a good hedge. But if you look at when market crash, gold typically also goes down, because they have to all those who are getting liquidated, they need to get their cash somewhere. And what are they going to sell? If they have gold position, they were going to sell their gold position and cover their liquidation elsewhere, right? So, and in the end, you both of them go down, and what it was meant to become, right, to hedge and give you stability in times of crisis, is no longer, or not always, the case. So I agree with you. Historically, it's been perceived as a good hedge, and that isn't the case always, and in the recent times. So yeah, I have that that critique on gold as well. So it's not a perfect hedge, and I wouldn't be, just by the fact that it's an underperforming asset, I have a little bit of a trouble with that, because why would you be putting in terms of risk-adjusted returns? I mean, why would you be choosing inferior assets if they don't, push up your returns in longer term? Doesn't make sense, even if you compare that with the risk you're taking. So in that, so to me, it's not a, it doesn't make a great case to be included in everyone's portfolio. But I can understand that some people do have that attraction to gold, precious metal, historically, and so on.
Absolutely. But let me say one thing: if like really a war breaks out somewhere where you live, and you have to flee, you're going to have a heck of a hard time taking your gold with you. And so this is for me the flaw in the equations a little bit.
How much gold do you need though?
I don't know. I don't know, like a gold bar or whatever. I mean, that stuff is heavy as well. So
then again, if there's,
I got a lot of backpacks. I got a big car. It's not going to be a problem.
But then again, if something very, very catastrophic happens and there is no electricity, then Bitcoin, it won't be saving us either.
Absolutely. But this is like kind of, those black swan events, if something like this happens, if like we have a EMP pulse coming from the sun that takes out all of our satellites and energy grid, then Bitcoin is not worth anything anymore. Absolutely true, but nothing is worth anything anymore then, except maybe owning a house and having a fire pit. And
you know where you should invest in? A farm. All right, a farm. Like Bitcoin, gold, that's not going to help you. Get a couple of cows, chickens, something to, you know, some fish. That's all you need. And you can sit there and just watch the world burn. Yeah. All right, so let's talk about trading here.
I'm keeping you from trading, guys. Actually, sorry.
I think what we're seeing right now. Okay, so I did take a trade this morning. Luckily, got out of this trade very early. Just on that little move up here, got out of that one. Didn't feel right because I felt like I was basically buying into resistance, and when it feels like I'm buying into resistance, it's better to just get out. So I entered this trade based on interesting technicals, right? Interesting technicals. And what I mean by that is at the time of printing this pattern, I quite like what I was seeing. We had because what I saw was, if you look at the daily, is price came down into the long RLC here, the reload zone at support. But then after entering, I kind of felt like, you know what, it's this is the level that needs to get reclaimed. This, to me, this is the trade, right? So I need to get that reclaimed. And I was lucky to get that feeling when in profit, right? So I felt like when exiting this trade, I had that feeling of that intuitive feeling that something's not right. There's something that's not right about this setup. I'm getting out, and I did. And thankfully I did. And we also had major news event at the time of around exiting. So a good example of, me I think I made a mistake, but I didn't realize that I made the mistake until later. So I got lucky to get out in profit. So other trades that I'm looking at currently, I got 4 charts of interest. I had 5, right? But I guess I still have 5 because EURCHF can still this week start moving like this. And then if we reclaim that level, I'm going to be looking for a move up here. So it's still a possible trade for me. So what I'm going to do is I'm going to be adding an alert right here. And one pair that's looking very interesting is NZDCAD. So if we go to NZDCAD in the daily, we're at a strong support right here. And if we can get above this level right here, marked as resistance, that white line at the top of this weekly support, I think we're going to get a move higher. And if we zoom in, so this is actually a picture perfect trade of what exactly I want price action to look like. So here you have a strong high time frame level, and you see price quite rapidly coming down. You have multiple daily candles, and there's no slowing down until you hit this zone. There's no slowing down, and when you hit the zone, there's a pause. Price is pausing. It's telling you that this level, I'm ready to use this level as support. That's when I go into the day 4 hour, and now on the 4 hour, you have a possible shift in structure. You have lower lows, like just a big sequence of lower lows and lower highs, and now we have our first higher low, and potentially also, well, technically we have a higher high, but I want that to be a swing point. So that could potentially be a higher low, and then I want to see a higher high, and that's where I want to see the retest of this level to be trading this higher. So that's what I'm watching right now on NZDCAD. Hopefully I can get an entry on this on the close of this 4 hour candle. So if this 4 hour candle is closing above that level, I'm going to enter this trade something like that. So that's NZDCAD. I mean, they got GBPUSD, and we have potentially the same thing happening here. If we look at the daily, we see again a strong level here on the daily. I believe this is this is sort of like a weekly level as well, but it's very obvious on the daily. We come down, we hit this high time frame level, and now what I want to see is a break of structure. We have potentially a higher low, and I want to see a move like this to form a higher low and a higher high, and that will then be my entry. I'm just going to take this trade up to the FTA, which is right up here. basically the same as the NZDCAD trade. CHFJPY is also forming a very good structure here with a higher low on the 4 hours. So we can look at the 4 hour right here, and we have basically what we're getting here is a W structure with the right leg of the W being higher, which is a great indication of a bottom. So that's the pattern that I want to be trading as well. I want to go long here, stops all the way below that low, and then TP at these highs right here. And then on EU, what am I looking at on EU? Actually, I'm not looking at anything on EU. I don't really see a trade here. But this is the result of my weekend scanning. So right now I got 1, 2, 3, and 4 possible trades that I'm taking. I made some money on EURCHF, but that was actually, I'm going to mark this trade as a not according to plan, because I believe that this was not the perfect trade. A good trade, but not the perfect trade. And I'm only looking for the perfect trades, and they look like this. What's nice about this is none of these are correlated. They are all, and well, if you ignore EURCHF and CHFJPY, these first 3 are not correlated, which I really like seeing, because a lot of times I'll have 5 pairs that I'm watching and 4 of them have the same pair. You know, they're correlated with each other, which is very problematic. So this is actually, it looks good, because it means that when I get an entry, I can enter you know, at least 3 out of them right away before without having to split the risk between them.
Nice. Yes, I will show my screen to show what I'm looking at. I did have a couple of losses. It doesn't sound sexy or popular to say that, but that's what it is. And what I was looking for is the following. If you look at the daily order, the daily on EU, we have come into this demand area, which we, by the looks of the wick, is the proper reaction that we had yesterday. So price could not go way beyond it, and was starting to form some kind of a reversal or a reaction in any case. And if we go to the lower time frames, I knew that because this wasn't forming bullish order blocks on the
now
H4.
You're the one typing.
Sorry, I'm sorry to interrupt. I was just about to write to you in the private chat here that I have to make a move. My wife is stuck in traffic. I have to pick up the little one from the kindergarten.
All right.
Thanks for having me, and
all right.
all the best for you. See you next
time.
Thanks
for your time,
Thanks for coming on. Take care, man.
And all your good insights. Thank you.
Yeah. And he's
yeah.
gone.
So. Yeah. So what the reversal, right? Because the way I see price is that, or I read price needs to reverse and tell us it's going to reverse. And if it doesn't tell me that, then I'm going to assume it's going to continue, right? So, and from this on the H4, on this move we had before, let me get that right. This impulsive move, I'm still expecting some kind of a reversal, if it is going to reverse perhaps to this bearish order block above us. And it hasn't done that yet. This is a little advanced for in terms of technical analysis and Quasimodo, but I was talking about this on Discord, how to anticipate a structure that hasn't happened yet, but just to be aware, where is the pivotal moment or break of structure or the neckline for that structure. That possible reversal, right? The neckline would be here, right? But that hasn't happened yet. It just formed it right now. So that's okay. Let me get that out. So assuming that, or considering that, I would assume if it does not form that reversal, which it hasn't done yet, it is probably going to continue to go lower, right? So that's my general idea. However, I did get a signal which doesn't take that viewpoint into account. It just takes, if the market does this on a long list of things, then I need to be going, take that signal. And the signals were I took entries around this area, right at the end, at the bottom at it, and they were here more or less, and they, as you can see, they didn't work out, so I lost 3R, which is okay. Remember what we talked yesterday? A loss 2 or 3 in my case is just fine. It is missing the trade that is going to hamper or affect.
Sorry, Victor, sorry to interrupt you here, but can you show me where you entered again?
Oh yes, well, it's actually on the lower time frames, of course. If I would go to the lower time frames, my entries were in, not on the 5, but on the, let's see, I had entries on structures that I had here. I believe I took them off already because normally as soon as the structure is invalidated, I need to, clear up my graph. Otherwise, I'm going to have all kinds of things overlapping each other. My area was in here, my entries, and this is on the 3-minute, but and I did get a couple of signals in this price action. It was very little, but that's the signal. So I took them, and it didn't work out, and that's fine, no problem. It's but what I was looking for, of course, was we did have everything lined up: the H4, the H1, and this would be the area if price would be going to higher places. Because if you consider this, we interacted with a daily order block, right? And one scenario would be that price would need, and that still can be still true, that we need it to it might bounce from here. And if it does that, and I don't know that in advance, but if it does that, that would be the best area to get in based on the H4 and the H1. And I would try to take part of the entry for the top of that structure, and perhaps try to hold it for the next structure, higher time frame structure, which would be the lower border or something within that daily order block. And that didn't happen. And if it would, my entries were, my stop loss was, I believe, I could check them. They were 2.6 pip. If you consider that plus the whatever commission you may have, so there will be something in the range of perhaps around 4 pips. I mean, so it would be something like this, around 4. And
that to me, I mean, that, like, how,
I'm sorry,
that is such a tight stop loss. Like, how do you determine that that's the stop loss level? Is it based on technicals, or is it just based on number of pips?
It's based on candles, right? Because when you get to that level, that granular view zoomed in so much, you don't get to see a lot of patterns, right? So you have to go with the candles entries. And so what you use is basically what I use on the higher time frames as well for the technical analysis, which is the open, the high, the low, and the close of the candles. You use those data. Those are the data points you have, and based on the analysis and the statistics I have, I know where to. If it is going to, that is the condition. If it is going to reverse, it is not likely to take me out if I put it this place based on the OHLC data that I do have, because everyone has the OHLC data, right? It's in front of you. So you don't have anything else unless you go to
for those wondering
what
that is, it's open, high, low, and close, or open, close, high, low. Is it OHLC? Is it? So it's open, high, low, close.
Yes.
It's basically the candle.
Yes, it's basically what the candle is made of, right? It's made of an open, a close, and somewhere in between a high and a low. And that's the only data you have when you go to the 1 minute. Of course, you have more data, but I mean, if you want to be very precise with the entry and with the stop loss, the take profit is, of course, on the higher time frame. So I'm not interested. It doesn't, the 1 minute doesn't give me the TP, but the stop loss, which is very important. Where do I set it? And where do I set it is based on those data, plus, of course, the structure that I may have but the structure gives me the area, right? The area where I'm interested. In case, the case in point, the area was this, right? This order block on the, and that's on the 3 minute. This order block is only, what is this? 1.6 pip wide, right? Can you see that? The blue dots, the blue data here is the upper border of that order block is 816, and the lower border is 814.4. So there's a difference that the width of that order block is only 1.6, right? So if you base your entry on that, the assumption is that this is the place where the price will react to, right? And if it is going to react, it shouldn't go much further down, right? And how much further is adequate to put your stop loss? That is something you need to figure out with your statistics, right? By having a lot of data, you can put it and say, okay, the what you want to see is the times it does react to that order block and go to, you know, a structure above, right? So what you're going to do is, I'm now on the 3 minute, but let's say you're on the 1 minute and there isn't a 1 hour, there isn't anything beside this order block, right? There isn't anything in between. I'm gonna make this bigger so we can zoom in. So this is the area, right? That's the order block right there, and in blue shaded. Can you see that? That's that little thing that says, it says possible entry on the 3 minute. If I'm going to enter there, and that's the idea, these structure above me are possible TPs areas, either the whole order block or this top. And if I don't have anything, depending on the time of the day, I would target the lower border of that order block or anything from the left that gives me within this daily order block, which is the higher time frame, of course, structure. So the way I tested this was when price comes to this area of interest and it goes to at least this structure, which is the FTA, right? What stop loss, and this is the key question, what stop loss would have kept me in all the time?
Okay.
That's the key question. So you ask yourself, this is what I want to catch, this move when it reacts from this order block to that bigger H2 order block. And if you do that often enough, you will see that it doesn't have to be 10 pips. It doesn't have to be.
Okay, so basically what you're looking at is like, if the reaction that I'm looking for is happening, what's the smallest stop loss I can use?
Yes.
So to find that statistics, to find that data, how many trades would you say that you need to be confident in that?
I would see a couple of hundreds at least.
Wow.
Yeah, you gotta put in the hours. I mean, you can get a fair good idea on.
How do you get the data? Like if you have 200 trades, how do you get that data? What type of what type of metric would you look for? Like what are you looking for? Because I guess you're not manually going through every trade, are you?
Yes, I am.
I guess you have to. I guess you have to. So you look at every trade and then you ask yourself, like, how far down did price go before?
That's why a lot of people don't like doing backtesting, because it's a lot of work and a lot of time, and you may not find anything. You know, no one is going to guarantee you that you're going to find the perfect entry or setting for your stop loss based on whatever rules you have. You're going to find looking for different things until you find one, and it might be the third, fourth, fifth thing you're looking for. And this is different from backtesting, because when we say backtesting, people say, okay, this is backtesting. Basically, is when you already has a strategy and you want to test it on historical data. That is backtesting. But what I'm actually showing here is not backtesting. This is explorative, gathering explorative data. I'm exploring. I'm measuring. I'm measuring. Okay. What is the maximum excursion, adverse excursion from that point on, right? And so you have to devise you have to adapt your your data collection to answer one question, which is the stop loss placement.
I think that's sort of like system development. Is like, and I think that is
it is, yeah.
That's the most exciting part about trading, in my opinion. You have because that's really when you can completely have complete freedom of, because what we're doing is in nature is quite creative. We have an idea, and then we're like, oh, wait a minute, I'm going to try this out. So you're really letting your creativity, control, your actions. And when you have this idea and you go into the market and you go into statistics and you start trying things and with a trial and error approach, it's like, that's very exciting because it really gets that creativity going. And also I think you need to be very interested in this sort of stuff, because I mean, I know you've spent a lot of hours doing this as well, and when we say a lot of hours, we were talking about almost full-time occupation going through these trades, like insane amount of hours. I mean, I've if I'm working like 6, 7, or 8 hours a day, I'm probably doing the same hours of back testing when I take everything into consideration. And when I'm in a like a period when I have an idea that I'm testing, I'm doing it all weekend. Almost every hour of the day, all weekend, is sitting looking at screens. So yeah, I think gotta put in the work. You really have to put in the work, and otherwise, there's going to be someone out there who actually does put in the work, and your stop loss is going to be his take profit, basically.
My confidence comes from the results I get from my testing. That's where I get my confidence from, because I know what I'm doing. I'm not going blindly doing whatever I feel like. No, I know I have the data, I have the numbers telling me that this has this kind of win rate if I do this. And so it's not, I'm not guessing. I don't know which trade will go to TP. I just never know that. But I know that after 100, I know more or less with some standard deviation what the results will be if everything is done according to the strategy. So so that is how I set in. And sometimes I think you mentioned something right there about the creativity, because we're hitting on something quite close to my heart. I think this is what I'm good at, and that's why I can make the money I'm making. Right? It's not about other things like indicator, and they're fine and they're useful, and there can be edge and indicator if you use them correctly. But my edge is in this, my building my system, everything and the process you do it, I can do it again if I would like to, and just look for another system. The skill of system building is what makes me excited. Right? Based, of course, you have to include your price action, screen time and experience, because in this system is based on price action. It's not based on just raw data like quants do, but it's based on the actual price action that I read and that I I form an opinion on. There's another thing I would like to say is that. You said something about creativity, and I think when you're trying to build your system, you have to ask yourself the right question. It's not just about collecting a lot of data unless it is relevant to the question you're trying to answer, right? So it's very important from the get-go to collect the right kind of data and put it in a frame, in a framework that is actually going to answer the question you have. My question, for example, in this question you had, my research question was, what is the optimal stop loss placement for this kind of entry? And this kind of entry is very objectively defined. there's no doubt where it is. It's not something more or less here. It's exactly there, right? Because I have a mechanical system. And to answer that is, it takes a lot of time, but once you got it, you have that's real edge in there, because you know you have data supporting you that is going to do this more often than not.
Yeah, and I think we talk a lot about trading psychology here on the live stream, but it's important to remember that trading psychology doesn't mean anything without edge. If you don't have
Yeah.
if you don't have a trading system, if you don't have a technical edge, then psychology doesn't mean anything. So I always say, like, you can be profitable with a mediocre system, but very good at trading psychology. I think a lot of people they listen to that and they say, "Oh, okay, so I just need to do something." Well, you actually first have to figure out what's profitable, what is a profitable trading system, how does that look, back test it, get confident in the number. Because if you don't have if you don't have the data to back up your profitability in forward testing and live trading, then you cannot be confident and you can't even begin working on your trading psychology. I think you need, before you even understand what type of trading psychology you need to work on, you need to understand the fundamentals of trading, and you need to get that, the basics of trading in. You need to understand candlestick formations. You need to understand historical price action. You need to understand horizontal levels, market structure, all of that. You need to be very, very good at that, and then you can start working on trading psychology. So when I say, just read Trading in the Zone and you'll be profitable. Well, I'm expecting you to understand the basics of technical analysis before you actually start reading about trading psychology. I think they go hand in hand. And I'm starting to understand people that say that trading psychology is like a scam, because they think that it's all about trading psychology, but it's not. It's a combination of the two. You cannot be successful with only trading psychology or only a profitable system. But again, if you have a trading system with extremely good edge, then trading psychology matters less. If you have a system where you have like a 90% win rate and a decent risk to reward, which I would say is maybe 0.5% of all the traders out there, then trading psychology doesn't really matter a lot, because your edge will make you profitable anyway. You can make a lot of mistakes and you'll still be profitable, but most people have around 50% win rate. So that's why trading psychology is so important.
Yeah, and that's why I'm totally agree. That you hit the nail on its head. That's why I start with my students. I start with system building your edge, how to collect data, and I don't start with psychology until when they have a good foundation of the things I mentioned first, right? You got to have a system, a correct way to approach a strategy that is validated. That's the first thing. You got to have edge. You have got a validated strategy, profitable. Then you're going to execute it, and it is through execution that you will find what are your limitations that you in terms of psychology that you need to work on. How are you going to know that in advance if you're going to be trading something that's not profitable? Of course, you're not going to have any profits because you don't have a system that is validated and profitable. So it doesn't make sense for me to start on psychology at all before actually having a system that did all the data collection, and you did all the testing, and now you're getting ready to employ it in the market.
Exactly.
But let's get back to the chart.
Yeah.
So what I that was a long detour, but that was the entry, which I obviously, that order block, that entry obviously did not work, right? So I had three, if I'm not mistaken, three entries, all of them lost, and that is okay. What happened next, I think is to me is key. look what happened. And I left the structure especially to show the viewers, because of course this order block is no longer there. This is the H4. Let's go to the H4, and it closed below that order block. This bullish order block, the structure which was the basis of my entry, the price closed below it. That's one of the rules I have. When it closes below, that's the time it invalidates. So that order block is no longer there. And what we do have is the structure completely switched over to bearish setup, right? So these lines don't mean anything anymore. If we go to the daily, just to start from a higher time frame, we are in a demand area in the daily area. So yes, I could have expected, and I did expect, some kind of reversal or transition to bullishness on the lower time frame, but it did not work, right? So I have to be flexible and say, okay, if that didn't work, what is next? What do we do have? And if we go to the H4, we do have a new order block, which is also an outside bar, right? And if it breaks, it didn't break the daily yet. Let's go to the daily. It hasn't closed below that daily order block yet, so it didn't break it yet. But the way it behaved, right, while interacting with this daily order block by forming this H4 outside bar, not a regular engulfing, but an outside bar, tells me that this daily isn't likely to hold, because this is not the market defending. This is almost saying capitulating, because the sellers are getting in, and not getting in by a little, by a lot. So they're dominating, meaning that that's a sign of weakness, and this means that this daily order block will likely not hold much longer unless price switches back. But I mean, likely not to happen, at least until it does. But what price action is telling us right now is that when it gets to that order block, it's still showing weakness, and that's a sign that price will probably will have an easier time continuing to the downside. And when I have that switch on the bias that I have on my expectation for what price can do coming next few sessions, at least today and perhaps tomorrow, I have that daily order block. I'm sorry, not a daily, an H4 order block, which was formed by that outside bar. It's not an entry, and got a different template for that. So, and if I try to refine that area, this is the area that I have in my as the point of interest. So I'm now waiting for price to come back to this area to trigger me, show me it wants to reverse by showing reversal pattern on the lower time frames to get my entry to go short, right? So it takes patience, and that's what you need in trading, and not feel FOMO because it left, and you might think, oh, it's never coming back, and sometimes it doesn't come back. We'll have to accept that. But it is when it comes back, that is your moment, and that is your place to participate, or at least my place to participate in the market. Remember, we mentioned this not many days ago, that there is a place and a moment for each one of us, depending on our strategy to act, right? To me, it's not right down here, even though I expect price to go much lower. It is waiting for price to come to my area. That is the place that I want to be, coming to the market and see and try to read the market if it is giving me the signals on multiple time frames, on the lower time frames as well as the higher time frames. And when it does that, I can get in, backed with my, data that I have with this type of signal. I have no problem if it stops me out again, because I know in the long run it is profitable. So and that's something I think is nice about the price action of EU. And if we go to GU, we have, of course, they go similarly in terms of price action, since they are both dollar denominated pairs. We did have a reaction on that daily order block. Beautiful reaction. Look at that wick, how it comes so close to that daily order block. What does it do when it gets there? reacts
that's
right away
perfect.
and closes. That's a very beautiful. That's why the order blocks, they work so nicely. And I don't want to say this is better than. It's not about being better or not, but you know, this is the order block according to many people, right? It's the whole candle, including the wicks, right? um you know, the opposing candle before it moves in an impulsive move. But if you see this, this is the reason why I use the open and not the wick of the first candle, right? And to me, this is when this happens, and I see this happening so many times. This is the way I should be doing it, because it gives me a tighter area to, you know, to be fishing for that opportunity. And a tighter area means, you know, less noise in your signal, because you have, you know, it has less. It's, you're being more selective. Automatically, your signals are going to be better because you have a more selective. You're filtering out those that don't work as well. So basically, okay. So on GU we have that. On the GU we have the same price action, which is the outside bar that was formed within the same period. And I'm going to expect or wait for price to come back to this area and see if it is reacting and reversing as it should. And if it does, then I'm going to be taking that back probably to that wick or that order block below us. So I'm very excited to wait for price coming back and see. I was waiting, by the way, a short here from yesterday, because we already had that H4. You can see it on the graph. I have it on my screen, but it did not trigger me, right? So it did not trigger me. It didn't give me a signal, so I wasn't able to participate in this first impulsive move. But it did give us another one, and I will be waiting. So this is the area now that I will be waiting for price to come to. If it comes, and if it doesn't, that's fine. I'll let it go. And if it comes, I will take it. And if it stops me out, that's fine. But I know, because you can without even going into details where I enter, I would enter exactly. But on GU, I typically have a little higher of a stop loss. Let's call it 5 or so. It's a little higher than EU, but if I'm able to catch this, you can understand that I don't mind being wrong once or twice, 3 times, 4 times. If I get each one signal that I get will produce me sometimes, not all the time, sometimes you know, multiples of what I lost. So it's fine. I just have to, you know, have my risk setting in a way that I don't get caught up in. I don't lose a lot when I have a little streak of perhaps 8 or 10 times, and those streaks, they happen with me. Sometimes they do happen, so I need to account for that, right? I can have 10 losses, a streak of 10 losses in a row, and that shouldn't affect me too much on my equity curve. And if I've done my risk setting right, then I know it's okay, because it's just a matter of the, you know, the equity curve. How much drawdown are you allowing your natural fluctuation in your equity curve or your strategy to be on the fluctuation, the natural fluctuation on your strategy to be on your equity curve. And that's something you decide by choosing your risk setting. So those are the two setups that I have on EU and GU. They're not signaling right now. While we were talking about crypto, I did have those signals, but of course I didn't want to hijack the conversation with a signal.
So looking at GU there, where would you go long? Like, so because I'm looking at longs once your entry area is invalidated. That's when you get a break above your entry area. That's when I'm looking at longs.
Okay. My strategy is based on the structures the market has made, and those are the order blocks. So to me, to look for a long means that on the H4 specifically, because that's a choice that I made, the H4 has to show me that the buyers are coming into the market at a specific area. And I don't see that yet in this chart. So I can't tell you where that's going to be in the future, if it's going to happen. So I have to wait for price to tell me where it wants to defend. And then I start looking for the other signs on the list before I can give you an area where I would be entering, like I'm doing right now with the yellow lines, right? These horizontal yellow lines, they're based on the H4 telling me that this is the area where they came to sell the market, right? So that's the area I want to go short at. And for me to go long, it needs to do that in reverse, of course. So it needs to be somewhere that the market defended, showed me in advance that the buyers are willing and able to buy it, and not by a little, but by a lot, taking control. And then I'm going to be waiting for that retest of that area to get my entry. And how I frame it, that's something personal with different structures and different time frames. But those are details. The idea, the overarching idea, is the same. I'm going to wait for price to show me first what it wants to do, what its intention is, and then I'm going to wait for it to come back. That's my entry.
Okay. So let's just assume that the current candle that we're printing now on the 4-hour, what if this one would close as an outside bar? Would that would be a bullish signal, right?
Yes, that would be on the H4, right?
Yeah,
So that would mean.
And if you get that confirmation on the H4, by the way, we have news coming out in like right now on JOLTS.
Yeah, 3 seconds.
So we'll see how that moves. But let's see if if the 4-hour candle would close as a outside bar. What if, like, where would be the entry if you want to go long? Would you long that, and where would you enter that?
Not right away, because my strategy uses a top-down selection for the entry. So the H4, the strategy is I want to be entering where the H4 and the H1 or H2 is telling me the same thing. So they have to have alignment. If they don't have alignment, so if the H1 and the H2, there are no structures there, then I have nothing to do, even though the H4 is telling me it's going up, and it's probably going to go, right? So I need to have a couple of things in alignment. The H4, and then I'm going to look at the H2 and H1 only after the H4 has formed what I'm looking for. Then I identify the area that is most likely to be, that has the greatest chance of being the area to be used for price to bounce at when it comes for the retest, right? Because let me maybe it helps to let's assume that we formed that bullish order block as you're saying on, if it close above here in the next 3 hours, right? It'll form another bullish engulfing, and that would be part of the signal, right? So the H4 would form wherever it will be, right? Let me move this a little further away, assuming something like this, right? And then I would have to go to the lower time frame. The H1 is then signaling, so I can move on with my trade plan, which is going to the H2 and H1, and they would have to form structures within that H4, right? So you could have something like an H2 telling me this is the area that was defended before, and I have a method of selecting which ones are the best to trade from, not all of them. And then I would identify that area. So I'm not going to trade the whole H4. It's very specific at using different time frames where I'm going to be entering to go long, and I'm going to be waiting for price to come back to that area and to bounce from it. Let me get that. Right, that's the idea after it forms those bullish structures. And what I do on the and even the yellow, what price does when it comes within those two horizontal yellow lines, I go to the minutes, to the execution time frame. All of this I do on the hourlies, which I don't execute on. So I don't use the hourlies for that. I go to the 5 minute, the 3, the 2, the 1, and I get my structures. I start the whole thing that I did on the H1, the daily, and the H2. I do that again on the minutes, because the market is fractal, right? It will do the same things that it does on the H4, on the H2, right? Forming those structures one within another. And then I get my quasi and I get my signal, and that's when I pull the trigger. I hope that helps you understand. Perhaps the viewers.
Yeah, we have Yeah, but I also I think we should, in another live stream, definitely dive deeper into this, because it's definitely fascinating. And I'm always looking at, how can I, improve my my own trading even more. And I'm very interested to see how, because in most of your ideas here, potentially I could get a much earlier entry on my setups with your ideas. But guys, we're at the over the 2-hour mark here, and we don't really have any specific setups that we're watching right at this very moment. But tomorrow is going to be quite an interesting live stream. We are going to do some live trading on gold, and I'm going to look at if I can't find any swing trades on gold, I'm going to go into lower time frames, and I'm going to see if I can make some money on gold. We've had quite successful run on gold on previous live streams. So it's going to be very interesting to see how that is going to look. So guys, thank you for joining us here today, and we'll see you all tomorrow for some live trading of gold. You don't want to miss that one. It's going to be a really good, exciting episode.
If you like our session, don't forget to hit our like, subscribe, and we see you tomorrow.
Take care, guys. See you all tomorrow.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here.